pleasure to be here, and thanks Kevin and Andrew for inviting Drewry to be moderating this panel. I think after lunch, in case you've dozed off in the previous session for whatever reason, I hope you are refreshed now. So I'll be glad if you could pay attention to the panel because we have a very, very esteemed panel. Khalid, Gao, Stamatis, Alok, and Yahya. So everybody comes with a very lot of experience, actually decades of experience in shipping. And therefore, it's going to be a very fantastic panel. So I think Stephen talked about the 700 PCTC being on water. So I thought I should take this opportunity also to flaunt about dry bulk. So dry bulk, there are about 13,400 ships carrying about 4.5 billion tons of cargo with about a billion-ton deadweight. So that's dry bulk for you. So, and that makes me even happy to moderate this panel because this is the largest shipping segment in the world today. So the aim of this session will be to really talk more from the high altitude, given that we have just 30 minutes. So I'll just begin from Khalid. So Khalid, the sector has not been as boring as PCTC lately. So just tell us what's gone wrong, particularly in terms of demand, and where are we today?
In fact, I think nothing has gone wrong with demand. Demand has really been reasonably strong. So if I just give you some numbers and I'm going to read this out so that I don't make any mistakes. Let's look at China, first 8 months of this year. Iron ore imports was 776.4 million metric tons, up by 7.3% compared to last year. Coal imports, 305.5 million metric tons, up 82%. Steel production was 305.5 million metric tons. Was 712.8 million metric tons, up 2.7%. Steel exports was 59.5 million metric tons, up 28.5%. Steel consumption in 8 months was 658.4 million metric tons, up by 0.5%. If you take the steel consumption number and the steel exports number, you will see that it is larger than the steel production in the country. Now let's just look at the month of August. Coal imports in August was the highest recorded in any month ever, was at 44.3 million metric tons, up 50% year on year, and up 37% above the 5-year average. Iron ore imports jumped to 106.4 million metric tons in August, up 11% year on year and 5% above the 5-year average. Soybean imports came in at 9.4 million metric tons, up 31% year on year and 12% above the 5-year average. August imports were some 20% above year on year numbers for iron ore, coal and soybeans combined. Now, if you can't call that an exceptionally good year, I don't know what you can call as an exceptionally good year. If you look at India, unfortunately for India, I only have the first half numbers. Iron ore exports at 22 million metric tons was up by 74.2%. Rice exports in the first half was at 11.2 million metric tons, down by 1.4%. But remember, it was because India banned exports of rice. Coal imports in the first half was at 117.6 million metric tons, up by 5.5%. Steel production in the first half was 65 million metric tons, up by 4.1%. Steel imports in the first half was at 3 million metric tons, up by 28%. And steel exports in the first half was at 4 million metric tons, down by 24%. So India is consuming more steel, obviously exporting less, importing more, and producing more. So steel consumption in the first half was 64 million metric tons, up by 7.5%. And in terms of the supply side, if you look at the 1st of September numbers, then you'd see that The 20-year-olds in the fleet at that moment in time was 8.24%. Against that,
Maybe,
the
sorry,
forward
Khalid.
order book was just
So Khalid, maybe we
7.8%.
defer the supply to later stage. So let's just maybe focus on demand for now. I think I feel really ashamed, after listening from Khalid. I'm an analyst by profession, and he has just rattled off everything, right? So I have never been so detailed. Thank you very much, Khalid, for detailed statistics. But so overall, it has been really a great story so far. But of course, the market remains slightly moving upwards, but still remains largely in doldrums for now. But just looking forward, maybe, Gao, so how do you see the demand coming from China? Do you see the robustness that Khalid spoke about is going to remain in the months to come and the years to come?
Just we can observe the China import so many raw material this year. Just he mentioned the increase a lot. I think one important reason just because of the raw material demand is closely related with the GDP growth. China this year, we focus the GDP increase about 5%, but last year, we all know, it's only 3%. So the GDP increased 2% compared with the previous year. So that's why China imports so many iron ore, coal, and green. That's the main important reason. But next year, I read a lot of material. I found a lot of international organization for the Chinese economy next year will a little come down 4% or 4.5%. So I think the demand for the iron ore, coal, and the green probably a little decrease compared to this year. This year is very special. This year really imports too many iron ore, coal, and green. So I think next year demand still there, but the speed will coming down.
Yeah, thank you. Stamatis, being a pure play Capes owner, do you have a rosier picture than what Gao is saying, or you also believe what you are saying, that what Gao is saying, that there will be a moderation in growth rate?
Well, thank you. I couldn't agree more with Khalid's comments before. We've seen demand so far this year from China to be more than 100 million tons of cargo, which is a very impressive figure. The reason why we have seen weak rates is completely different, and that's going to be covered by the supply factor, I guess. We don't really see any issues in the immediate future about demand arising from China because inventories are very low. Right now, despite all this increased cargoes coming into China, we're seeing very low inventories at 111 million tons of inventories. It's one of the lowest of the last 5 years. So they consume a lot of iron ore, they consume a lot of coal. Something also very important is that since the beginning of the war in Ukraine in February 2022, there have been 150 gigawatts of projects for coal-fired electric plants. So coal is going to remain dominant in China in order to have the energy independence. So iron ore is expected to remain very strong. Coal imports will remain very strong to cover all these electricity needs of the country, which cannot be sustained or replaced in the immediate future by wind turbines or anything like that. So I don't really see any slowdown as far as demand is concerned arising from China.
Okay, thank you. So we are expecting a robust demand growth going forward. But would you want to add anything else, Alok or Yahya, or that is it? Is there anything more to the demand story from your perspective?
One element we all miss, even if there is a gap in supply demand, but it is the sentiment of the owner as well as the charterer or the shipper. It drags the rate, the way it should move up, because I come from owner background as well as the operator. So owner sentiment is high, they're expecting market to come up. They don't want to fix the vessel till the time she becomes spot or they start ballasting for the front haul. So even if you see the gap in supply demand, it takes 2 months, 2.5 months before actually you see the markets to come up. That is what is happening. Last 2 months it should have gone up, But now you see a little up market in the month of September and may continue till October. So that sentiment also plays a lot.
Thank you. Yahya, any last thoughts on the demand prospects?
Yes. I mean, at the end of the day, we are still having a positive year on the demand side. So we estimate that total dry bulk trade growth will be up to 3.5% by the end of this year. So this is a positive number, good news for us. When it comes to China, which is the most effective country for our industry, so my current view is that we will see improving economic news coming out of China in the next 12 months. In the past 12 months, both industrial production and manufacturing infrastructure investment has actually been very strong, but this has mainly been a recovery from low COVID-affected base levels. While the property sector is still weak, it is now of lesser importance in the overall China still complex, and with other sectors such as autos, manufacturing, shipbuilding doing well, the drag on growth will be much reduced going forward. Having said this, we do not expect China to roar next year. The massive growth in coal imports is unlikely to be repeated in 2024, while imports of grain should remain strong.
Yeah, thank you. So overall consensus appears to be that there will be a modest growth going forward. A few days ago, one of my friends told me that the panel discussion as a concept was devised for a few people to sit on a dais a few feet away from the ground and just talk among themselves and not bothering about who is sitting in the front. But I really want to bother about who's sitting in the front. So if you have any question with regard to demand, please raise your hands. It will be helpful if you could identify yourself and then ask the question. So anyone, any question? There is a roving mic, I understand, from Andrew. Okay, Sichen.
Just quick questions regarding the China's iron ore imports. Seems to be the volume has been quite strong this year, regardless of the struggling property market domestically. I'm just wondering what is behind that strong imports, despite of the struggling property market? Thanks.
Stamatis, do you want to take it up? Being a Gibbs.
First of all, what we seem to over-concentrate on the Chinese housing market, and we have good reasons after all these prospective bankruptcies of the big house developers. However, China is producing 55–56% of the global steel production, and you have so many infrastructure projects around the world, trillions of dollars of new infrastructure projects committed, commenced, and financed. So we expect that to continue to drive very strong steel demand from around the globe. So it's not only about China, it's not only about iron ore, it's also the thermal energy requirements that are expected to be quite strong. I saw with my own eyes in Rotterdam, inventories of coal are particularly low compared to last year. So there will be a lot of cargo movements going forward, and we see that from our own ships. The scale of the cargoes is quite immense. So, the Chinese housing market is one thing, and it's a big demand driver. But right now, the world and the global demand has diversified into other fields as well, such as energy, such as other infrastructure projects around the world. So we're not dependent on just one country. We're not dependent on just one commodity. It's more diversified right now.
Thank you. You want to add? Okay.
Yeah, Sichen, you're a journalist. So maybe I have a question for you. Just think about it like this. Everybody writes that 25% of steel consumption in China is from the property sector. I've given you the numbers for the first 8 months. China has consumed more steel this year than last year. And if 25% of that is supposed to be consumed by the housing sector, and they're dead, according to what you were saying, then where is the steel going? So steel is being consumed in China. Like our fellow panelist, Yahya has pointed out correctly, that it is the shipping industry, auto industry, and other manufacturing goods where they're consuming a lot of steel. If you saw some of the presentations done by the other panelists before, especially the last panel before us, they were talking about how the car exports from China are going to be the largest movement in the world. So when you look at how do you produce those cars, they all require a lot of steel. So what I'm trying to get at is that this myth and fallacy that has been created by the mainstream media, and which all of you follow, shows that China's dependence, rather that the property sector consuming 25% of all steel produced in China is a myth. It's not a reality anymore. So we should stop that story in its tracks and get to the truth of it. So as a journalist, you should find out where is the steel going. And what the panelists have pointed out is exactly where it's going. It's not going anymore in that volume into the property sector. Okay?
Yeah, thank you, Khalid. So any other question from the floor from the demand perspective, only demand perspective? Any more? No, okay. So great. Khalid, maybe I begin with you again, given that you had already started about it. So supply, as we know, hasn't been a problem probably for dry bulk if you were to exclude post-global financial crisis and a few years following that. But in recent years, it hasn't been a problem. So what does supply tell us in terms of expected earnings, for example, in the, let's say, months to come? Where are we there?
Yeah. I mean, you can't look at it in months to come, but yes, over a longer period of time. Say, like if you look at the forward order book, which I was talking about, it's at 7, as of the 1st of September, is showing as 7.8% up to the end of 2027. And at the same time, on the 1st of September this year, there's 8.25% of the world fleet which is over 20 years of age. Now, with the EEXI coming in, with CII coming in, the fact that people are concerned about the carbon footprint that they're giving off, the older ships are the ones which consume more oil, and they will go away from the fleet shortly. Now, Philip Cloutius said something this morning that sort of stood out. He said that if the fuel transition was not so much on our minds, we would have been ordering a lot of ships. I think it's not because the fuel transition is like the main cause of this. I think the main cause of this are threefold. The first cause is that, of course, container lines, LNG carriers, car carriers, they've all pushed us out of the market for ordering dry bulk ships. Secondly, yard capacity has come down compared to the peak that was there in 2010 and 11. We are about 30-40% below that. So the capacity is not there to take on. And then at the end of the day, a shipyard has to look at its profit margins. And if you look at the profit margins that shipyards make, most of them are actually always losing money. They never make money. I mean, look at the Korean yards. Each one of them comes up with staggeringly high losses. And if it had not been for Korea Development Bank, if it had not been for the other development banks in Korea, those yards would have gone bankrupt if they were allowed to be on their own. So it's not a great business, despite the margins that they claim to get. And in the margin game, it is always the most complicated ships which have the largest margin, which means the gas carriers, LNG, gas carriers, large container ships, tankers. And last comes bulk carriers. And in bulk carriers, the last are the smallest ships. So I think that the reason why we've not been able to order more ships is A, we're crowded out, B, yard capacities come down, C, we are the lowest margin ships for the yards. So they just don't want to build for us if they can avoid it.
Okay, thank you. Yahya, Alok, and Stamatis, all three of you operate also larger ships, and I see that 7%, which Khalid mentioned, is for the dry bulk as a whole. But when you look at the larger ships, they have significantly higher, probably 15%, 20%, depending on which segment we are talking about. I'm talking about a specific size segment like Capes or Ultramax or Kamsar Maxes, etc. So does that worry any of you, or that's not really a worrisome thing at the moment?
Well, there are two elements about supply. It's the number of ships, and then it's the effective supply. The reason why the market has been suffering in 2023 is the unwinding of the congestion. The historical average of the congestion, if you take out the COVID, is around 7 to 8%. Right now, the congestion is at 1 to 2%. So that has released approximately 5 to 6% of additional dead weight into the water, and that's one of the reasons why the market was hit very bad. And at the same time, we had the cancellation of the grain corridor. During the grain corridor in Ukraine, you had about 250 Panamaxes and Ultramaxes trapped there for a period of 3 months, and that has been completely unwound. So all of these elements together, congestion down, and the unwinding of the grain corridor has led to the increase of the effective supply. There is a third factor, which not too many people talk about, but it's actually very important as well, is the deadweight adjusted speed. So the common myth, like you say, is that the global fleet speed average has decreased, and that might be true. However, if you look at the deadweight adjusted speed, that has actually gone up. If you look at all the Valemaxes, VLOCs, or carriers, and all the ships moving between Brazil and China, with an average deadweight of around 300,000 deadweight tons, they go with 15 knots. So on a ballast basis, 14 to 15 knots, on a laden basis between 13.5 and 14.5. And that contributes a lot to the effective supply because that creates the accordion effect, you know. And that's very severe, and it also increases a lot on the CO2. We have calculated internally at Seanergy from our own research that if the 100 larger ore carriers decrease the speed just by 1 knot, not going down to the eco speed, but instead of, let's say, average 14 to go down to average 13, the global reduction of CO2 emissions would be 500,000 per year, just by 1 knot down. But, you know, people don't talk about that. It creates a big problem. Now, moving on to the supply itself on the Capes, we have the lowest order book of the last 20, 25 years. So we expect in the next few years the fleet to, one way or another, reduce, either by many ships becoming obsolete from the environmental regulations, or because of age, or a combination of those. So the new capacity coming in 24, 25, and 26 will not be sufficient to cover the ships that will exit, either the number of ships or the effective supply that is going to be reduced. So that's why we think that there's a huge opportunity ahead of us because supply will be even more decreasing in the next few years.
So, Gao, any views on Kamsar Maxes?
So when we're talking about market, talking about from the supply side, we're not only talking about how many vessels will Drewry in future. Another thing I think we need to talk about utilization rate. Now we concerned about the climate change is causing the extreme and adverse weather event, such as the Panama Canal. They have, due to the drought, they reduce the throughput rate. Same as like a typhoon also lead to the port congestion and the vessel deviation. So this kind of, in future, if we believe the climate change is getting severe, so probably the utilization rate in future will have some big problem, have also reduce the utilization rate in future, so also influence the market. Yeah.
Thank you. Alok?
Yeah, I have one thing which also you should have added. The scrap price, especially for the Cape vessel, if the scrap is at 550 and tonnage which is nearing 20 years of age, that also makes a difference. You know, the fleet which is becoming 20, the special survey cost $1.5 to $2 million, and as an owner, if the scrap is at 550 or 600, it makes economic sense to scrap. So that factor also, especially for Cape, not for Panamaxes or younger, smaller tonnage, but that factor is also very, very important, how the demand supply for the tonnage will happen.
Thank you. Yahya, any comment on from the supply perspective for your vessels?
Supply growth has been steady, but not really slow, in my opinion. I mean, same as last 10 years. This year we will also add a few percentage, maybe around 3% addition to dry bulk fleet overall. And I think next year is going to be similar as this year as well. So there are good things happening on the demand side. Maybe supply side is not so, numbers are not so high, but it's still basically positive. So I think we need to be careful about it. And also, I think scrubbing would have to pick up considerably to make the difference.
Thank you. So any question on the from the floor on supply side? Anybody? So as everybody agreed that we're going to have quite a robust demand and decent supply, so we are really heading towards a good time for dry bulk. So you should be asking questions. Please do ask. It's the right time to ask. You don't see Khalid and the entire panel every day. So he has to travel all the way from Bangkok. So please ask questions. It's really, really important time to ask questions. And I'm sure you'll repent after a year or so. Thank you very much. Please go ahead.
Hello. So I want to ask the panelists, I mean, on the dry bulk space, you have such a huge price differential between new buildings and second-hand ships like 5-year, 10-year-olds. And at the same time, you have the FFA curve going forward for the next 2-3 years being suboptimal at 12,000, 14,000 for the Capes, even lower for the smaller vessels. Would you ever consider at these levels ordering ships and financing them now that the interest rates are so high? Would such investment ever make sense?
So anybody who wants to take up this question? Okay, Khalid. Thank you, Khalid.
You're absolutely right. If you look at it in a dispassionate way and look at the price of a new building and look at the earning capacity that it has, it makes no sense. It's another reason why maybe people are not ordering. So the order book, if you go back in time, you will not find a ratio which is less than 1 when it looks at the 20-year-olds versus the forward order book. This is the first time that, at least that I have seen, the order book being less than the overage ships. And we're talking about 20-year-olds. So it looks good from a supply side point of view. It's never looked as good as this. So that part is a given. The question then is that what happens to effective supply? This is what Stamatis has tried to explain. If effective supply is reduced by A, slow steaming, B, engine power limits being put on ships. We have a fairly young fleet, 10-year-old fleet. Yet we've got 16 of our ships which have got engine power limits put on it under EEXI. And they will slow down their speed by anywhere, if you were comparing with 21, 22, we'd slow down anywhere between 1.5 and 2.5 knots per day for those ships. That's a huge reduction of the fleet. I can tell you on my 34 ships that are tramping, I've got 4 cement carriers which are on a very coastal type of run, but the 34 ships that are tramping, 5 out of the 34, so you can work out the percentage, it's almost 20%, 5 out of the 34 have been in port for more than 45 days each, waiting to load or waiting to discharge. It effectively absorbs a lot of supply. One of the reasons why the market has turned around so sharply and gone up is A, demand and supply balance is very close by. And then if you have something which upsets that balance, removes a little bit of ships, markets go up. Releases a little bit of ships, market comes down. So volatility is going to become much, much more intense. That's what it means. But it doesn't mean that it's going to be a bad market.
Yeah, thank you, Khalid. So, okay, we have just last 5 minutes, I'm told. So we are heading towards conclusion. So maybe, no panel goes without talking about environmental issues, right? So a little bit Khalid has already mentioned, but maybe very specific question to each one of you for your own vessels, because all of you operate it. And it's a controversial question, but I want to ask this anyway. We've heard about ammonia, methanol, LNG, e-methanol, all kinds of variants of it. So have you got an answer yet for your own ships, which fuel you are tilting towards? I know it's a complex question and its answer is not simple, but still if you can simplify it for us and very quickly in 1 minute each, because we have just 5 minutes left. Beginning from Yahya, do you want to start with your ships? Any favorite alternative fuel for yourself, for your vessels?
I mean, we are a relatively small company. We concentrate on Supramax to Ultramax vessels. So we are, of course, following where the market is heading to. And at this stage, we would like to basically wait and see how the big companies are going to react to this.
Okay, thank you.
We hopefully will follow them going forward.
Thank you. Alok?
Same here. I think let big boys spend some money, do research, burn or earn, then we will come back and see what is best for us. Sometimes second or last mover advantage is also there in the market.
Okay, so Stamatis, would you consider yourself big? So they have said you have to answer on their behalf.
Well, we do not consider alternative fuels for the time being. We're not convinced that any of the available fuels will become a prevailing solution, because demand for marine fuels as compared to the global demand for fuels is actually quite small. So I wouldn't bet on anything which is not going to be used anywhere else outside of the marine industry. So for example, where do you use ammonia? Where do you use methanol? Green methanol especially. So, there are bits and pieces around the world, but unless there is a prevailing global solution for the whole energy requirements, I wouldn't really bet on any prevailing future fuel for the future. As far as we're concerned, we're betting heavily and we're investing heavily for the last few years on energy-saving devices of various forms, so anywhere between $1 and $2 million per ship. And we're also, one of our ships recently became a model for carbon capturing technology, which associated with the scrubber can reduce the emissions by up to 15-20% on top of the already 10 to 15% that we're already reducing. So I don't really see any reason to reinvent the wheel by exotic fuels and expensive solutions if you can make the existing fleet much more fuel efficient.
Okay, thank you. Gao?
SDTR is ready. We complete the design with the Starry ABS for green methanol dual fuel vessels, dry bulk vessels start from 2020. We got an AIP award from ABS. We also get the AIP award from the CCI for ammonia dual fuel dry bulk Kamsarmax. But the point is, when we order from the Chinese shipyard, we find the cost is quite high. The CAPEX, the conventional fuel Kamsarmax is 35 million now, but the premium for the dual fuel methanol fuel Kamsarmax is about 9 million above. So the CAPEX is 20 to 30% higher. The OPEC just Seanergy mentioned the green methanol cost should be 2 or 3 times higher than the conventional fuels. It's a big, I think as a pure ship owner, it's difficult to burden about this kind of cost. Even if I know a lot of big ship owners, they start to do a dual fuel, methanol fuel vessel. But the point is, I think if we want to realize a large scale commercialization usage for the new alternative fuel vessel, probably need a long time. Probably. We need the entire industry, or we make effort, different part, we contribute ourselves.
Thank you. Khalid, I'm sure you've done a lot of research. I know you have. So what is your take?
I think ship owners are like good husbands. When the wife lays down the law, we just follow it. So I think we need the regulator to come in and make the laws. And if I were the regulator today and I could pass the laws as I wanted to, I would put $100 per ton fuel oil tax on carbon, $100 per CO2 ton of carbon emitted. So on a ton of fuel oil that you burn, 3.2 tons of CO2 is emitted. You have to pay $320. And then within 4 years' time, I would say double it. Then fuel oil and alternate fuels would become roughly at parity. That's the first law I would pass. The second law I would pass is that no more fuel burning ships will be produced after a certain date, say 31st of December 2029. Then the shipyards, their business will die unless they adapt to fuels of the future. Let them all discover what is needed and let them produce it for us. We will buy it and we will run it. But till the carbon tax is not there, no customer is going to pay you a reasonable price for building, as Gao has just mentioned. All these ships cost more money. And who's there to pay us? According to Dr. Martin Stopford, if things go badly, we will require $3 trillion to replace these ships that are there in existence. And that is just the existing ships, not the 2.5 times demand that he says will be increased by 2050, which means you need 2.5 times more ships than what you have today. Where is the shipyard capacity to produce that? So there are many factors. So the first law you pass is carbon tax. Second law you pass is that stop production of fuel-burning ships. Third law you pass is that anything which is above 20 years, say as of the 31st of December 2034, will be scrapped. Then you will get some parity, you will get some income into the hands of the ship owners, then they can order the new ships. But if these laws are not passed, nothing will happen.
So in summary, the life is very difficult for the dry bulk ship owners, right? That's what it means. What implication you can derive yourself. Thank you very much. It's been fantastic, all of you. A round of applause, please.